Warren Buffett just bet $1 billion on the housing revolution of institutional landlords. How's it going, everybody? My name is John Howard. In this short video today, I'm going to talk about that very subject, which is Warren Buffett and Berkshire Hathaway investing $1 billion. They just recently released in the end of August their 13F filing, which shows a nearly $1 billion investment, about $800 million into Lennar and about $196 million, so just shy of $200 million investment into DR Horton. These are basically the nation's largest home builders. So here's the thing. When you look at Warren Buffett and this investment, I mean, before I give you some of the facts about the transaction and about their filing, take note that Warren Buffett is very flamboyant about real estate being a lousy investment. In fact, one of my videos on this channel is about that very subject of Warren Buffett talking about, how real estate is a lousy investment. However, I think it's actually smart. Smart's not really a good word. Real estate has proven to be a very good investment for many reasons because it's got many benefits. But the reality is that I think that it's fair to say that Warren Buffett doesn't understand how good he really is, right? He's, arguably the best investor in the history of the world. And if you actually look at his track record, which is roughly 20%, from 30 years from 1995 to 2025, the fact is that the U.S. National Home Price Index beat it, right? So if you look at the Case-Shiller National Home Price Index, 1995 to 2025, that return is 309%. That's just home price. That doesn't include the other benefits, which are rental income and cash flow, the tax benefits, the fact that you can actually borrow against the equity of the property, and also the amortization benefit. But the point is that if you were to take 10% and put that down on, let's say, a $500,000 property or $50,000, that 309% is really 3,090% return, because that house goes from $500,000 up to $1.5 million plus, because it's, again, a 309% return on the home price. So if you actually do that math, that 3,000, which is really a 31x, that actually beats Warren Buffett and Berkshire Hathaway's 21x. Which is about their roughly 20% return or 21% return, which is really the same as the NASDAQ as well during that same 30-year period. So the thing is again, he's very flamboyant about real estate being a lousy investment. The average person that's not as good as Warren Buffett at doing regular stock investments should strongly consider it, because there's just too many benefits that you get from real estate. And the reality is people likely are probably spend money from their brokerage accounts. But basically, when you look into it, it's going to be important to understand why it is that Warren Buffett and Berkshire Hathaway made this investment. You could say that it's arguably, possibly, because it's a hedge bet against inflation, because if inflation kicks in and house prices keep going up. However, it might be something different. So let's get into it. So here, Berkshire Hathaway and Warren Buffett, their play isn't on traditional home builders. These builders have discovered that they can add a massive institutional revenue stream by selling entire neighborhoods instead of only selling one home at a time to individuals, right? So these builders are capitalizing on Wall Street's build-to-rent model. Michael Burry recently warned Blackstone Group just closed a new $30.4 billion fund, real estate fund, the largest ever. Competition for first-time home buyers just got a whole lot harder. Invitation Homes now owns 85,000 homes. Blackstone Group controls 50,000 plus homes. JP Morgan partnered with American Home for Rent. Invesco backed $5 billion for 20,000 homes, and Goldman Sachs is deploying capital into single-family markets. The BTR sector, build to rent, has exploded 277% since 2019. 350,000 rental homes now controlled by institutional landlords. Average BTR rent, build to rent, $2,181 per month, which is 10 to 40% premium over apartments. Occupancy rates, 97%, with only 28 to 35% annual turnover. The average American needs to earn $126,700 annually just to afford a median price home. Homeownership has become impossible for most. Only 6 million of America's 46 million renters can afford to buy today. Wall Street's observation. While the S&P 500 historically delivers 10.5% returns versus real estate's 4 to 8%. And again, that's just the home price appreciation. That's not all the other benefits, and that doesn't factor in leverage. Institutions see something bigger. What they see is the wealth building quinfecta. I call it the wealth building strategy quinfecta of real estate, which is, as I mentioned before, it's rental income and cash flow, it's appreciation, it's the tax benefits, which are depreciation and active income offset, which is usually through short and medium term furnished rentals, which is through something called material participation, which of course you have to actually qualify for. And then it's also, mortgage paydown or amortization. And then you get leverage through equity opportunities, which really just means you get the ability to borrow, your equity as your equity position increases. And then there's also a sixth layer, which, I like to talk about. I don't really hear it too much, but, my sixth opportunity is actually having a house to retire in as a person, right? But Wall Street sees the sixth layer as packaging these investments up as bonds and then earning fees from investors. So they syndicate the actual, the investment, and then they sell it as bonds. So they earn their Wall Street revenue from syndicating the investment. Berkshire is betting on a permanent housing transformation. Builders can now sell entire neighborhoods to institutions in bulk, while Wall Street securitizes the rental income. This is how builders benefit from Wall Street. Here's a list of items how these builders are going to benefit. Bulk sales to institutional investors. Lower construction quality standards. The focus is on cash flow. Perfect positioning for when Fed rate cuts make capital cheaper for institutional buyers. More Wall Street competition drives up prices, pushing more people to rentals. The American dream isn't dying. It's being financialized. We're witnessing the largest transfer of single-family housing from individual ownership to institutional control. When Warren Buffett bets $1 billion on housing, he's betting on a transformation, or you should at least pay attention, right? So there you go, everybody. That is the release. That is the video on the content related to Warren Buffett and the Berkshire Hathaway $1 billion investment in Lennar and also DR Horton. As you can maybe tell, I've been doing a lot of content on this channel on real estate. And the reason that I've been doing that is because I have a lot of experience with it, right? For the last 20 years, I've done a short and medium term furnished rentals. I've actually owned and or operated 5 of them over the last 20 years. And during that time, I also launched and operated 4 different businesses that all went up to 7 figures or more per year. So I say that because that's really part of my experience, but also because it's something, having short and medium term furnished rentals and kind of being able to build your wealth and build equity through doing that is something that's very manageable alongside of a very demanding career. In fact, someone in a demanding career with high income is the most likely to actually get approved for a mortgage. So it's a very strong consideration for someone in that position to actually, get some investment properties and build wealth for your family in that way. And also it's something that I've, personally benefited from, over the last, obviously during these years, over the last 2 decades, I've held on to my property. I've got, 2.875% 30-year fixed mortgages on my properties. In holding on to them, this portfolio of mine, which is not that big, it's just 3 properties. It does anywhere between 10 and 37,500 in booking revenue per month, and then there's multiple months through the year where there's 20,000 or more in monthly booking revenue. So it's become a very nice thing to have, right? And then that doesn't even include the actual equity of the properties, but it's also, hey, if I wanted to, kind of create my retirement from this, I could do that as well. So as I've said, you can see I've been doing a lot of content on real estate. If you like this video, everybody, you could consider giving the video a like. You could also consider subscribing to the channel, as I do talk about, building wealth through real estate. If you're somebody that is somewhat involved in real estate, or you want to get involved in real estate and you like the idea of short and medium term furnished rentals, basically because you get the most rental income and cash flow from those. It's about 2 to 3 times that of what are long-term unfurnished rentals. You can go ahead and look in the description area of this video, and you'll see I have something called the SMTR Launch Kit. You can go check out those links. It's very inexpensive, very easy thing that I have there that you can go check out. I also have very basic and very inexpensive email coaching if you'd like to do that. Otherwise, if you have any comments or questions about this video or real estate in general, you can go ahead and leave it in the comments below. I also have my email in the actual description, and you can email me as well. What I have is called the SMTR Launch Kit. That stands for Short and Medium Term Rentals Launch Kit. So again, thank you very much. And again, any questions, put them in the comments. Thank you. Take care.